Scalping is a popular type of day trading strategy that involves opening many small trades per hour and then adding profits and subtracting losses. Generally, these trades last very short, sometimes even a few minutes or seconds, depends on your objective and analysis. The goal is to make many small profits per day while limiting the amount of losses. In this article, we will look at how scalping works and then identifying some of the top 1-minute trading strategies handy to apply right away. As always, we recommend you do some testing in your demo platform first, especially to get used to picking up signals much faster. 1-minute scalping traders always look for ways to enhance their trading tactics. They apply different strategies that can help them seal the deal. One of the most popular strategies among the trading community is scalping. Scalping is like an action-packed movie where there's too much action. You enter and exit the trade in a blink of an eye. In this guide, we'll talk about the 1-minute scalping trading method. Then, we'll cover every inch of detail about the strategy. So, buckle up. This is going to be a fun and educational ride. This guide is for teaching purposes and is not a recommendation. What do you need to know about forex scalping? Scalping is the practice of profiting by buying or selling currencies, holding the position for a short amount of time, and then closing the position for a bit of profit. Forex scalping often comprises of profiting on small price changes on timeframes ranging from 1 to 15 minutes. Many traders, however, may opt to liquidate their positions in roughly 60 seconds rather than wait for a quarter hour or more. Beginners often drive towards scalping because of its fast-paced nature. However, as with any other trading style, you need to have a sound plan before applying the 1-minute scalping trading method. Even if you are a complete beginner in trading, you will have most likely come across the term scalping at some point. In this article, you will learn the answer to what is scalping in forex, how it works, and how to choose your own forex scalping trading system. Furthermore, we will also take a look at forex scalping strategies, focusing in particular on the popular 1-minute scalping strategy. What is scalping in forex? Scalping is a method of trading forex based on real-time technical analysis. When it comes to forex, a scalping trading system requires making a large number of trades that each target small profits. Rather than holding a position for several hours, days or weeks, the goal of scalping forex is to make a profit in minutes, or even seconds, just a few pips at a time. The FX market is the largest, most liquid and one of the most volatile financial markets in the world. Forex scalpers try to squeeze every possible opportunity out of these fluctuations in foreign exchange quotes, by opening and closing trades with just a few pips of profit. So, scalping in the forex market is essentially taking advantage of minor changes in price over a short period of time. Forex scalping is quite a popular style for many traders, as, thanks to the volatility of the FX market, there are usually ample trading opportunities throughout the course of the day. During the scalping process, a trader usually does not expect to gain more than 10 pips or to lose more than 7 pips per trade, including the spread. Therefore, in order for those 10 pip gains to add up to a substantial profit, scalping is usually performed with high volumes. Have you ever witnessed a trader who opens dozens of trades during a day only to close them a few seconds or minutes later? That trader follows a scalping trading style. They try to make a profit on very small price movements. Since the profits are low, a scalper needs to open a large number of trades during a day in order to make a respectable amount of profit. But beware, scalping can be difficult, especially to inexperienced traders. If you want to master the art of scalping, start first with some longer-term trading styles and try to become consistently profitable with them. Since scalping requires lightning-fast reflexes, fast decision-making and nerves of steel, there's no reason to believe that you would be a successful scalper if you can't make a profit with day trading and swing trading. Learn more, take our premium course, Trading for Beginners 1-Minute Forex Scalping Strategy in the following lines. We'll cover a simple yet effective forex scalping strategy on the 1-minute time frame. This strategy is based on both trend following and mean reversing, which lowers the number of false signals to a minimum. Still, you need to apply strict risk management rules and only risk a small part of your trading account if you want to become successful in the long run. You can use this trading strategy around the clock, but the best results are usually generated during volatile market conditions. That's why I recommend to make the bulk of your scalping trades during the New York-London session overlap. These few hours, from 8 a.m. to 12 p.m. EST, offer the lowest trading costs and highest liquidity, which is very important to scalpers. Also, most U.S. market reports are released early in the New York session, creating market volatility and increasing the profit potential of your trades. The strategy uses 2 moving averages and 1 oscillator. Here are the indicators and their setting that you need to apply to your chart: 50 period exponential moving average, 100 period exponential moving average, stochastic oscillator with a setting of 5,3,3. Strategy overview. Let's take a look at the 3 main steps of our 1-minute forex scalping strategy. Step 1. Identify the short-term trend. The 2 moving averages are used to identify the current trend in the 1-minute time frame. The 50 period EMA calculates the average price of the past 50 minutes, while the 100 period EMA calculates the average price of the past 100 minutes. The 50 period EMA is faster